Policy, as you know, RBI gives bi-monthly monetary policy. It's called as credit and monetary to basically to control the repo and reverse repo rates. Okay, various fluctuations. So follow this video till the end because this is an important tool of RBI for controlling the monetary, this inflation basically. Okay, so let's start without wasting the time. Yeah, what is the monetary policy? Monetary policy is a process by which the government, central bank or the monetary authority controls, number one, the supply of money, number two, the availability of money, and number three, cost of money and the rate of interest in order to attain a set of objectives oriented towards growth and stability of economy. Now you'll say, sir, such a big sentence, how will I remember everything? Okay, I'll give you some important points over here. Government, central bank or monetary authority. Why these three names are given? Government, central bank or monetary authority. Remember, in India we have central bank. Reserve Bank's main job is monetary policy. Always remember, Reserve Bank's main job is monetary policy. We call it credit and monetary policy. That's what actual name is. Okay. But then why government is given? Does government in any way speak something about monetary policy? No. Monetary policy is purely the subject of RBI. But what happens? This is a general statement for throughout the world. In some banks, there is no reserve bank or no central bank. In those countries, only directly government interferes. In some countries, there is a separate monetary authority, no central bank. So there, this monetary authority interferes. Okay. So that's why the point over here is it depends on country to country. In India we have central bank. Now that is point number one. Got it? Firstly, okay, tell me the name of any country where you don't have a central bank. Tell me the name of any country which you know, where you don't have a central bank. Anyone, yeah. Many countries are there, many. Total we have around what, 197 or more than 200 and something countries. Okay, there are many countries. Small countries, they can't afford the central bank, man, isn't it? Very South African countries also, many African countries are there. They are there. Many islands are there. Okay, so all those countries don't have a central bank as such. Okay, yeah. So coming back, so that is point number one. Number two. What does it do? Let it be the central bank or let it be government or let it be the authority. What does it do? It has two jobs mainly. One, control of supply of money, and second, availability of money. Okay, this can be combined over here. Okay, and third is cost of money. So understand, the main point of RBI is always main job is inflation. RBI's main job is to control the inflation. Okay. And second job is the supervision of this banking system. Okay, but that we won't be dealing in today because today we are only dealing with this inflation part. Okay, and there is third job also. There are many jobs of RBI, but main job is inflation. Okay, then forex is also one of the jobs. Maintain the forex reserves. Okay, yeah. Okay, tell me what are the roles of Reserve Bank? Who can tell me? There are 5 to 6 roles of Reserve Banks. Okay, which are those? Tell me fast. Write in the comment section. Which are the roles of Reserve Bank? Roles. Let me write it over here. Okay. Roles of RBI. Roles of RBI. So which are the roles of RBI? I'll give you one by one. Not an issue. Okay. But let me get it from your side also in comment section. Yeah. So which are those? Okay. Let me give one by one. Okay. I'll have to remember. First is what? Banker to banks. Right, so it is a banker to banks. So if any bank faces the issue, it also acts as a banker to the banks. Number one. Number two, banker to government. Right, banker to government means all the government bonds are issued through this RBI only. Number two. Third, banker of last resort, isn't it? Banker of last resort means if anyone doesn't answer me, I can directly go to RBI at the end, isn't it? So banker of last resort. Number three. Fourth, inflation control means monetary policy, we'll call it. Inflation control is a main job of RBI. Got it? This is the fourth role, right? So there are many. Supervision, bank supervision. So that is also a job. Now it has increased. It's not only bank supervision. Now it has increased to NBFC supervision, means financial sector supervision. Not limited to bank supervision now. Okay. So these are the rules, but main job of RBI for which RBI exists and common person is affected, that is inflation. Okay. So supply of money, availability of money. The money should be available to the common person, right? Available means it shouldn't be costly. Otherwise, what happens if there is no supply of money? The money becomes difficult to we get difficulty in getting the money. Okay, so there the growth is hampered. If there is huge supply of money, everyone will have money and there will be a huge inflation. Okay, so that's why controlling that is a main job of RBI. And cost of money again depends on supply and demand. Okay. Now RBI is coming up with CBDC also to cater to many issues of this currency. Okay. So cost of money, rate of interest, in order to attain the set of objectives oriented towards growth and stability. See here, both the things, growth and stability. Stability means inflation control and growth means GDP growth. So both have to be managed hand in hand. And remember, these two are always opposite of each other. If there is huge growth, stability is in jeopardy, or stability is in difficulty. Okay, because inflation increases. Okay, next one. Monetary theory provides insight on how to craft the optimal monetary policy. Correct. Monetary theory will provide you how to draft the optimal monetary policy. Now, what is this optimal monetary policy? Many of us don't know. New portion doesn't have that. I think so. Yeah, in this. They don't have that ISLM curve. In earlier portion you had that ISLM curve, investment, saving and liquidity, preference, money supply. Okay, that's called as ISLM. It is one of the best tools. Even you might be having it. Yeah, new portion also has it. Okay, it also has it. I have seen that. Yeah. So this ISLM curve is known as basically monetary theory, and here it gives RBI the right thought process to how to control this inflation. Okay. What is expansionary or contractionary? Okay. When an expansionary policy increases the total supply of money in the economy, a contractionary policy decreases total supply of money. Means what? See here, it's basically loaning system. Everything in this world works on loaning system. Even the currency which you hold, the rupee currency which you hold, is after all a loan given by you to RBI. Understand this concept very well. Okay, when you hold the currency of 100 rupees with you, what does it mean? It means you have given the loan to RBI, okay, of that rupees 100. That is the meaning of this. Okay, so that's why currency is actually the loan of the one who is holding it on the central bank always. Okay, so how does the loaning system works? Here RBI gives prints the money and gives money to these banks, right? So RBI not only prints money. Remember, printing money is not the main job. Okay, creating credit in the society is the main job. Printing money is a supplementary part. Always remember. So RBI will give money to the banks via repo. Okay, what will bank do? Once bank gets this money, bank will lend further to the customer, isn't it? So this process is known as lending process. Basically, RBI lends to bank lends to customer, and then customer spends. Now, because of this customer spending, there is a growth in inflation. So, if there is a growth in inflation, that's called as the expansionary policy. So, if RBI wants to control this, what will RBI do? Suppose if, let's say, RBI gives the repo rate at 4 and there is inflation. So, RBI will do what? RBI will say, okay, this inflation is increasing. Okay, so it will increase this 4, it will go to 6%. Or if there is less inflation in the even less inflation is dangerous for the country. So if there is no one buying anything, okay, so there is no growth. So what will RBI do in that case? If there is no growth as such, then RBI will decrease that repo rate. So that's called as expansionary policy. When it moves from 4 to 6, it's called as contractionary. When it moves from 4 to 2, it's called as expansionary. It's that simple. Okay, so everything is controlled over here. RBI, okay, it lends to bank lends to customer spends, all these things go on. Okay. Before moving ahead, download Adda 24/7 app on your mobile. In this app, you'll be getting the premium study material plus live classes, ebooks, tests, everything. Whatever you need for clearing JIB, CIB and various other banking exams, you'll get it over here. Okay, so do it fast. Let's move on. Expansionary policy is traditionally used to combat unemployment. If there is huge unemployment in any country, it will definitely RBI will reduce the rates from 4% to 2%. So that is called as expansionary. In recession, by lowering interest rates, while contractionary policy involves raising interest rate 4 to 6, okay, in order to combat inflation. Okay, understand one simple thing. If I decrease my rate as a RBI, if I decrease my repo rate, growth will increase, but always inflation will also increase. So what happens is growth and inflation, they are always they always go hand in hand. Okay, whereas growth and second one, this rates, okay, they always go in reverse direction. If rates increase, growth decreases. So always remember this basic: growth increases, inflation also increases. So if I decrease the growth by increasing the rates, inflation will also get decreased. Okay. So monetary policy is contrasted with fiscal policy, which refers to government borrowing and spending and taxation. So these two are totally different policies. Remember, monetary policy is mainly concerned with RBI. RBI focuses on monetary policy and government focuses on fiscal policy. Always remember, government focuses on fiscal policy. Both these policies should go hand in hand. Okay. Otherwise, government policy is going towards expansion and monetary policy is going towards this contraction. It will never help any country. Okay, so both should be in tandem with each other. So RBI always consults government. Always remember, because after all, government is the prime body in any country. Okay, RBI comes later. Okay, so monetary policy is contrasted with fiscal policy. Which what is fiscal? Fiscal relates to government borrowing and spending. Where will government spend on what infrastructure, what are the various schemes, that all is decided in the fiscal policy, whereas monetary decides only on money. That's it. Okay, now let me come to questions. Okay, bank rate is also referred to as, what is bank rate? Discount rate, subsidy rate, marginal rate, none of the above. What is bank rate basically? See, here bank rate is a rate at which, see here, nowadays this bank rate has been clubbed. Okay, it has been clubbed with what? It has been clubbed with MSF rate. So what is bank rate basically? Bank rate means the rate at which RBI discounts the promissory note of various banks. Promissory notes. Okay, RBI discounts the promissory notes of various banks and gives them money. Of course, it gives them money, isn't it? So it has been now combined with this MSF rate. MSF rate means this is the top level. See here, this is known as the corridor, decision corridor we call it, or interest rate corridor. This is known as MSF, top rate. Okay, MSF. Now this has been combined with bank rate, and this lower, this is known as this reverse repo. Okay, so these are the two maxima and minima. Okay, and this bank rate has been combined over here. It has been attached to this now, bank rate. Okay, rate, and repo rate comes somewhere over here in between. So repo rate will always be between this reverse repo and MSF rate. Okay, this is also called as reverse rate is also called as nowadays CDF rate. Yeah, that's a separate terminology. But coming back, bank rate is also called as what? Discount, subsidy, marginal, or this. It is known as, everyone, discount rate. Okay, discount rate means what? The RBI discounts promissory note. Discount means what? It's a discount rate. Logic, isn't it? Okay, subscribe to Officers Adda 24/7 YouTube channel. Remember, in this channel you will be getting number one, latest updates on all JIB and CIB. Latest. Whatever you are getting it from this IIBF, immediately you will get it over here. Number one. Number two, free YouTube series. The series which you are watching right now is free YouTube series. So you'll be getting a similar series on all the subjects. So subscribe to it. Click on the bell icon. Do it now. Pause the video. Do it now. Okay. Move on. What is OMO? OMO means open market operations, open market organization, open market monetary operations, and none of the above. What is OMO basically? Okay, forget these names. What does RBI do in OMO? It buys and sells bonds. Okay, bonds. I'll write it over here. Bonds. Okay, right. It buys and sells bonds. Okay, now let me explain it further, because these are the basics you need to understand. When it buys bonds, then what does it do here? Bonds are buys means bonds go over here from bank. From whom does it buy? It buys from bank. Okay, let me write it over here, bank. Okay, so bank gives bonds to RBI. This is RBI. Okay, bank gives bonds to RBI, and RBI does what? It gives money, isn't it? Money. It's simple. It's like that vegetable vendor. You give money, that vegetable vendor gives you vegetables. Same logic. Now this is called as where what? Where RBI gives money. It is known as repo, isn't it? In repo, RBI gives money to the banks, isn't it? Lends to the bank, and this is reverse repo. RBI sells bonds, so bonds are will come to the bank, and bank will give them money. So that is reverse. But what is OMO full form? Full form is this: open market operations. Okay. Yeah, many of you have typed it. I have seen this. That's the correct answer. OMO, open market operations. What is meant by monetary policy? Now, this topic is of monetary policy, but what is that? A process by which Parliament controls the money supply, a process by which central bank or the monetary authority controls the money supply, process by which international market controls the money supply, and none of the above. So, see here, many remaining words are same. Important part is only this: Parliament, central bank, and its international market. So who controls this money supply using monetary? Is it A, B or C? Forget this D. Okay, is it A, B or C? Parliament, central bank or international market? It is obvious, isn't it? B. B is the answer. RBI is the one who controls this monetary policy. So monetary policy, monetary authority, basically in other countries monetary authority, but in here RBI. Okay. What is the difference between real interest rate and nominal interest rate? What is this here? Real interest means what? Let it be anything. Real inflation, nominal inflation, real interest, nominal interest. Both, any two words comparison of real and nominal means one and the same thing. What is that? Real takes into account the inflation. Second, nominal rates are those which apply only to borrowers and not to lenders. So which of them is true? Only one. So real takes into account inflation. Only two. Nominal are only applicable to borrowers and not lenders, and both 1 and 2. So both are true and none of the above. So what can be the answer in this? Everyone? Yeah? Let me wait. Okay, let me see. This is a tricky question. Okay, and really difficult one, to be frank. Yeah. What is the answer? Yeah. Alright. Real interest rate takes into account inflation. That is true. Inflation means what's here? Always remember, real and nominal. There are two things. Okay. Let me take you something. Base year. Okay. Base this. Let me consider this as base year. Today is what? 2023. Okay. Let's consider a base of 2020. Okay. 2020. 2020, correct. Okay, let's consider this as base, and today is what? 2023. Okay, so if I'm calculating real inflation or real interest rate, okay, in 2023, then what will I do? If my interest rate presently is 7% and my base year's interest rate was 4%, then I'll take into account the difference. 7 minus 4, 3%. So I'll say the difference is 3%. So my real interest rate will be roughly 3%. Okay, because it takes into account the inflation part. Means what has been increased. I'll consider this 3% as a major component. But if I consider this as nominal, nominal means what? No base year. Nothing. No comparison with this. So if it is 7%, I'll simply say it's 7%. It's absolute number. It's not a relative term. So remember, real is always a relative term. So 1 is true. What about 2? Nominal rates are those which apply only to borrowers and not to lenders. Is it so? Nominal means this 7%, if today is the rate, will it be applicable only to borrowers and not to lenders? Means if I am a bank, I am a lender. So won't it be applicable to me? So that is wrong. So only 1 is the answer. Okay. Now one for your homework. When the foreign currency is fixed and the value of the home currency is variable, it is called as what? Means this is foreign currency, let's say in this case only, $1 equals to rupee 80. This is called as what? Direct, indirect, cross or variable rate. Think over it, okay? I'll give the answer tomorrow, okay? Chalo, yeah. So before going, let me discuss this batch. Okay, March 27th, it's starting today. Yeah, yesterday only. Okay, this batch has just now started. It's a foundation course going on. Main topic will be starting in on April. Okay, in April roughly. So join this batch ASAP. All the numericals, case studies, objective questions, everything is being covered. 80% off is going on. Double validity on Mahapacks. Use the code Y432. How to use it? Okay, let me show you. Let's go to Adda 24/7 live. Okay, hold on. Let me take you to Adda 24/7 live. In fact, if you are having this app, go through the app, because in the app you are getting that coin system. As the coins get generated in your account, you will get 1% extra also over there. Okay. So go to Adda 24/7. Gone. See this. Okay. Click on JIB and CIB. Now you'll see the batches. See these batches. CIB 23. Click on CIB 23. Click. You'll see the batches. See this. March 27th batch English. Click on this. Click. You'll see the details. What is the date? What are the timings? Then how many days of a week? Study plans. Everything is there. Okay. 50 to 78% off. See here, our actual fees was different, but now it is reduced by 78%. But still, don't go for it. I'll give you more offers. Put the code Y432. Click on more offers. Put the code Y432. Click on apply. Now look at this. 80% off is going on right now, but that is for limited period. 4799 is something which you will be getting at this full batch. Okay, all the 4 subjects, everything. I would suggest go for the Mahapack. In fact, Mahapack gives you something additional. Okay, in Mahapack what happens? So this let me show you in Mahapack. GIB CIB Mahapack. Okay, in Mahapack what happens? Click on CIB ka Mahapack. So this. Once you click on this, you will get the details. Roughly, I'll tell you the main details. You can read it at your ease. Okay. Okay. I'll tell you 15 plus batches for ABM, BFM, all those 4 subjects. 15 plus batches. Then recorded videos are available. Okay, of course recorded are there everywhere. Okay, then ebooks are available, tests are available, separate selection batches are available. What all do you need more? Isn't it? That much is enough. Only 3 months are remaining. Okay, again look at this fees. Discounted fees 35,996 was the fees, discounted 78% off, but get more discounts because ye dil mange more, isn't it? Y432, isn't it? Y432. So look at this. Now this reduced to 7199. Okay, means it is more, 80% off you are getting. So go for it right now. It's a huge discount offer going on. It won't last long. Okay, so I'll be back tomorrow with another series. Till then, bye. Keep studying, and I would always suggest join the batches first. Why? Because here time is limited. Portion is new. You'll be needing a guide, a mentor. Okay, so bye from my side.